Right now, as you're watching this video, the most powerful currency in human history is collapsing. Countries are dumping billions in US dollars. Oil is being sold in yuan. Gold reserves are skyrocketing. And the financial system that's controlled the world for 80 years is cracking apart. Most people have no idea this is happening, but it's going to affect your money, your job, and your future whether you pay attention or not. This isn't a conspiracy theory. This is economic reality. Welcome back to the channel. Today we're exposing why the US dollar is actually crashing and what comes next. To understand why the dollar is crashing, you need to know how it became so powerful. In 1944, at Bretton Woods, New Hampshire, 44 nations gathered near the end of World War II. Europe and Asia were devastated, but America emerged stronger than ever. These nations agreed to peg their currencies to the US dollar, which was backed by gold at $35 per ounce. This created the Bretton Woods system, making the dollar the world's reserve currency. Even after President Nixon ended the gold standard in 1971, the dollar maintained dominance through a different mechanism: oil. In the 1970s, the United States struck a deal with Saudi Arabia and OPEC nations. America would provide military protection and arms, and in return, oil would be sold exclusively in US dollars. This created the Petrodollar system. If any country wanted to buy oil, they first needed to acquire dollars, forcing every nation on Earth to hold dollar reserves. This privilege is hard to overstate. Because the world needs dollars, the United States can print money to pay its debts without facing consequences other nations would. When Zimbabwe prints money recklessly, it gets hyperinflation and economic collapse. When America does it, the impact is spread across the entire global economy. The US also controls the SWIFT payment system, which processes international transactions. This gives Washington power to freeze assets, impose sanctions, and essentially exclude countries from global trade. We've seen this used against Russia, Iran, Venezuela, and North Korea. For decades, this system seemed unshakable. The dollar accounted for about 70% of global foreign exchange reserves in the early 2000s. International trade was conducted in dollars even when America wasn't involved. But empires don't last forever, and the cracks in dollar dominance are now becoming canyons. The dollar's decline isn't happening overnight, but the warning signs have been flashing red. Let's look at the concrete evidence. First, countries are diversifying away from dollar reserves at an accelerating pace. The dollar's share of global reserves has dropped from about 70% in 2000 to roughly 58% today. Central banks in China, Russia, India, Brazil, and dozens of other nations are actively reducing their dollar holdings and buying gold, euros, yen, and even each other's currencies. China has been particularly aggressive. The People's Bank of China has reduced its U.S. Treasury holdings from over $1.3 trillion in 2013 to around $775 billion today, a reduction of nearly 40%. Russia took even more drastic action, reducing its dollar reserves from about 40% to less than 10% of total reserves. Second, the petrodollar system is crumbling. In 2023, Saudi Arabia announced it would sell oil in currencies other than the U.S. dollar. China and Saudi Arabia have discussed pricing oil sales in yuan. Russia now sells oil to China and India in rubles and rupees. Each of these moves chips away at what made the dollar indispensable. Third, alternative payment systems are emerging. After the US froze Russian assets and cut Russia from SWIFT in 2022, it sent a message: the dollar system is a weapon. China accelerated development of CIPS as an alternative. Russia created SPFS. The BRICS nations are actively working on payment infrastructure that bypasses the dollar entirely. Fourth, America's debt exceeds $36 trillion, more than 120% of GDP. During the COVID-19 pandemic alone, the US printed roughly 40% of all dollars ever created. This devalues the currency and erodes trust. Finally, inflation has shown the dollar is losing purchasing power. What cost $100 in 2000 now costs over $180. Countries are asking why they should hold a currency that consistently loses value when alternatives exist. The dollar's crash isn't just about economics. It's about a fundamental shift in global power dynamics. For the first time since World War II, The United States faces genuine competitors who are coordinating to challenge its financial hegemony. The BRICS coalition, which now includes Brazil, Russia, India, China, South Africa, Egypt, Ethiopia, Iran, and the UAE, is explicitly working to reduce dollar dependence. At their 2023 summit, they discussed creating a BRICS currency backed by gold or a basket of commodities. While implementation faces challenges due to differing national interests, the mere discussion represents a direct challenge to dollar supremacy. More than 40 countries have expressed interest in joining BRICS, suggesting widespread dissatisfaction with the current dollar-dominated system. China's Belt and Road Initiative is another piece of this puzzle. By financing infrastructure projects across Asia, Africa, and Latin America, China is building economic relationships that facilitate trade in yuan rather than dollars. Chinese companies are increasingly pricing contracts in yuan, and countries indebted to China are more willing to conduct commerce in Chinese currency. The yuan's share of international payments has grown from virtually nothing 2 decades ago to about 4.5% today, making it the 5th most used currency globally. The rise of digital currencies poses another threat to the dollar. China has already launched its digital yuan and is testing it in cross-border transactions with several countries. This allows instantaneous settlement without correspondent banks or SWIFT, completely bypassing the dollar system. The European Union is developing a digital euro. Even if the US eventually creates a digital dollar, it will be competing in a multipolar digital currency landscape rather than dominating it. American sanctions have also backfired strategically. The US has imposed sanctions on countries representing billions of people, including Russia, Iran, Venezuela, North Korea, and others. Rather than isolating these nations into submission, sanctions have incentivized them to build alternative systems. They've learned that integration with the dollar system leaves them vulnerable to American political decisions. Every time the US uses the dollar as a weapon, it gives other nations a reason to develop alternatives. Meanwhile, America's internal political dysfunction undermines confidence in the dollar. The 2023 debt ceiling crisis, during which the U.S. came dangerously close to defaulting on its obligations, shocked international observers. The political polarization and brinkmanship over fundamental economic management raise questions about American reliability. If the dollar loses its reserve currency status, the consequences will be profound. For Americans, the immediate impact would be dramatically higher prices. The U.S. imports far more than it exports, running a trade deficit of over $800 billion annually. This works because the world needs dollars and sends cheap goods in exchange for paper currency. If the dollar crashes, imports become expensive. Electronics, clothing, and food would cost significantly more, and the American standard of living would decline sharply. Interest rates would spike. Currently, the U.S. borrows at low rates because of enormous global demand for Treasury bonds. If that demand evaporates, the U.S. needs higher rates to attract buyers. This means expensive mortgages, car loans, and credit cards. Government interest payments would explode, forcing massive cuts to services or tax increases. The stock market would experience extreme volatility. Much of its growth has been fueled by the dollar status and the Fed's money printing ability. Retirement accounts and investments would suffer significant losses. For developing nations, the picture is complex. Countries forced to hold dollars would gain monetary sovereignty and could trade in their own currencies, reducing costs. Nations with commodities would have more power. However, the transition would be chaotic. China would emerge as a winner if it manages the transition well. A weaker dollar makes Chinese exports competitive and accelerates the yuan's rise. However, China's enormous dollar reserves would lose value. The most likely scenario is a slow decline over the next decade or two rather than a sudden crash. We're moving from a unipolar to a multipolar currency system, marked by volatility, financial crises, and reordered global relationships. For individuals, diversification is critical. Don't keep all wealth in dollar assets. Consider international stocks, gold, real estate, and other major currencies. Develop skills valuable regardless of currency fluctuations. The rules of the last 80 years are changing. The dollar's crash isn't conspiracy theory. It's happening now, driven by economic realities and geopolitical shifts. Understanding this trend is crucial because it will shape your economic future. The dollar's decline is one of the most important economic stories of our time, yet most people have no idea it's happening. If this video opened your eyes, hit that like button and subscribe for more deep dives into the forces shaping our world. What do you think will replace the dollar? Will it be the yuan, gold, Bitcoin, or something else entirely? Drop your predictions in the comments. Thanks for watching, and I'll see you in the next one.